everyone, it's Fiona from Nadaya Financial and it's Mortgage Monday. Well, haven't we had a big week, huh? We've gone from most of the country employed to a lot of it unemployed, and in that week a lot of things have changed and it's made a lot of people quite anxious about their incomes and what they're going to do with their mortgage. So today we're going to discuss 3 different options if you have been affected by COVID-19 and you have a mortgage. So first of all, we discussed the payment pause last week, just briefly touched on it. So some banks are offering up to 6 months where you are not required to make a repayment on your mortgage. Some of them are giving you a 3-month to begin with, then reviewing it and then offering another 3 months. So in that time, you're not required to make any repayments on your mortgage, which is a wonderful thing if one or both of you are not working anymore. The thing about this repayment pause is when it expires, what can happen is your loan term may be extended by 6 months, or the interest that you haven't paid in those 6 months and the principal amount will be added on to the rest of your loan term. So your repayment might be a little bit higher. So some banks offer it differently to other banks. So you need to find out exactly how it's going to affect your mortgage in the long term. Now, the second option that you have, that some banks are also offering, are just to go from principal and interest repayment to interest only for the 6 months. So that brings your mortgage repayment down quite considerably. Maybe not half, but it could come down probably at least down a third. So that's something also to consider. Not all banks are offering this, so I do recommend asking your bank if they do give you the option of just paying interest as opposed to not paying anything at all. The third option that you may like to consider is if you're one of those people that actually has been paying a little bit more than what they need to every week above their repayment, and you have extra repayments and it's all built up in your redraw, well, that's great. You might be able to use that redraw now to help you out. What you'd need to do though is to take the money out of your redraw and either transfer it into another bank account or into your offset account, and then make the repayments with that money that you have aside to make repayments to your mortgage that way. So they're the 3 options that you have or that you can consider if you're not working and you're looking at reducing your expenses for the next 3 to 6 months. So we have the repayment pause up to 6 months with your bank. Check them out and see what their term is, long term with your mortgage. Second of all, just going to interest only. And third of all, if you are paying extra on your mortgage and you have redraw, you might be able to get that working to your advantage and using that to make those repayments going forward for a little while before you have to pause your mortgage. If you need any information or if you'd like to know further about what I've discussed today, feel free to leave a message below and have a great week. Stay safe and sanitize. See ya.